you're doing good. Welcome back to one more video on ratio. Ratio analysis, we are doing the activity ratios. Yes, the third category of ratios. In that, we have already completed three ratios. The trade receivables turnover ratio, trade payables turnover ratio, working capital turnover ratio, and fourth one now we are going to do is inventory turnover ratio. Alright, all these ratios, let me remind you, are talking about the level of activity of the business and how well the management is managing the working capital. Meaning figures, right? Creditors, debtors, working capital, that is current assets, current liabilities, stocks, isn't it? So we are talking about how well my stocks are rotating here. The average level of inventory, meaning the opening and closing stock added and divided by 2. Meaning on an average, what is the level of stocks we have with our, with us in our godown and warehouses. Okay. And how many times is it converted into sales? That means what? It should be fast. We are producing goods, we are stocking them. And they should be quickly sold also. We should not have huge stocks, and lesser sales. That would show slow moving stock, bad sales policies, or not, just good enough goods being produced, right? Therefore, we need a good decent ratio for inventory turnover ratio, which again is expressed in number of times like the other three turnover ratios, alright, the activity ratios. Now, if you've understood the purpose, let us talk about cost of revenue from operation, which you already know is cost of goods sold. Matlab, either you can, use the sales and gross profit, gross loss approach to find out, or the other formula, which is opening stock, meaning opening inventory, plus net purchase, plus direct expenses, minus closing stock or closing inventory, right? That formula. Or if you're talking about sales minus gross profit, or sales plus gross loss. You already know that if loss hoga, that means what? Your sales is lesser than the sale price is lesser than your cost price. Therefore, sales plus gross loss will give you cost of goods sold, and something like that is given in my first sum. Gross loss ratio is 5%, meaning 5% of sales. Gross loss ratio, I told you earlier also, if nothing is mentioned, gross loss ratio is a percentage of sales, even gross profit. Okay, so now 5% of sales is the loss. So whatever is the sales, if I add the loss to it, I will get the cost of goods sold or cost of revenue from operation. This is cost of goods sold. Cost of revenue from operation is nothing else. Yes, revenue from operation is just another name for sales. So cost of goods sold here in this case, we will try to find out using sales and gross loss. Sales revenue from operation is given as 16 lakhs. So 16 lakhs plus 5% of 16 lakhs, that is the loss. If we add, we get 16 lakhs 80,000. This is what? Cost of goods sold. Right? Cost is this much. Sales is 16 lakhs. Therefore, loss of 80,000. I hope you've got the equation right. Obviously, you have been given the average inventory, which is my denominator, so I don't have to work myself on that. So 16 lakh 80,000, which is cost of revenue from operation, by 2 lakh 20,000 comes to 7.636. You will round it off to 2 decimal places. So this 6 we ignore, and we make this 3 a 4. So 7.64 times is my answer, meaning whatever stocks I have are getting converted into sales at the rate of 7.64 times in 1 year, which is a good decent ratio, meaning my stocks lie in the godown or with us for how much period? If I tell you how many times, this many times. We have 12 months total, so 7.64 times. So this is, it will come to somewhere around 1.6 or something, because it's, or maybe 1.7 times, okay, 1.7 months. So my stocks do not stay with me for more than, even not, they're staying with us even less than 2 months, which is good enough. Keep fast selling. Now again, a very high ratio will be bad, which will show that we do not have enough stocks and there's so much demand. So there might be some situation where we might lose out on sales because stocks ही नहीं है, sell क्या करेंगे? right? So a very high ratio is also not good. Fine. So this is as far as sum number 1 is concerned. Sum number 2 gives me a statement of profit and loss for a year. Statement of profit and loss, you are familiar with this format. Income. Income is revenue from operations, 9 lakhs. Expenses are purchases of stock in trade, changes in inventory, employee benefit expenses, other expenses. Total expense is 6 lakhs. So 9 lakhs minus 6 lakhs, 3 lakhs is my net profit before tax. Tax is not given here. Alright. So ये मेरा statement है. Notes to account says that changes in inventory, meaning this 40,000 in bracket that I am seeing negative, has come from opening inventory is 1 lakh minus closing inventory 1 lakh 40,000. 40,000 net. Yes, an increase in stock. Now always remember children one thing very clearly. Changes in inventory means always opening inventory minus closing inventory. Always. Opening से closing में क्या change हुआ है? So opening minus closing inventories, changes in inventory. Of course that can come in positive or negative. अगर opening stock ज़्यादा था तो closing stock से तो positive में आएगा. If the closing stock is more than the opening stock, negative में आएगा. Yes, so you should understand this very clearly because we use this in solving our sum. So what do we know? How do we get cost of revenue and how do I get average inventory? Average inventory तो बड़ा easy लग रहा है because opening और closing inventory both are given to me. So average inventory is 1 lakh plus 1 lakh 40 divided by 2, 1 lakh 20. Done. What about cost of revenue from operation? Cost of revenue from operation either it can be sales minus GP. अब sales minus GP gross profit निकालना यहाँ से दूसरा काम हो गया ना, लंबा काम, लंबा प्रोसेस. Easier process is use this formula. Cost of revenue from operation is opening stock plus net purchase plus direct expense minus closing stock. This formula will help me. Yes. So if I use this formula, I have opening stock, I have closing stock. Direct expenses I can find it out from here. There is no notes given here. So employee benefit expenses can have wages, salaries, bonus. Out of that only wages is direct expense. Remember all those expenses that you take to trading account are direct expenses. लेकिन यहाँ पर कोई split नहीं दिया है, balance description नहीं दिया है. So we will not assume any expense to be direct unless specified. Therefore, I cannot see any other direct expense. ये भी नहीं, other expense भी नहीं. So this direct expense is zero here. Forget it. Closing stock, opening stock and net purchase is also given. Purchase of stock in trade. That means I can get cost of revenue from operation. Simple? Yes. So again I have two options here. One is I do this. Opening stock, how much is it? 1 lakh. So I do 1 lakh plus net purchase is 6 lakhs minus 1 lakh 40,000. So it comes to 5 lakh 60,000. I can do that. Or I can also do it like this. See, changes in inventory, opening minus closing. This also you need to understand it. Opening minus closing. इन दोनों का total effect क्या है? Minus 40,000. So I can also write it as purchases plus changes in inventory because opening minus closing is changes in inventory. I can reframe this and it is important to know this because इस sum में तो दोनों दिया है. Maybe in some other sum you get stuck. So you've just been given changes in inventory and you need to find cost of goods sold. So you should be knowing what to do. You might just get stuck thinking अरे opening closing अलग नहीं दिया हुआ, how do I find it out? Doesn't matter. A change shows whether the opening stock was more or closing stock was more and then you decide. So this formula also you should understand how from this only we have got this. This is something new. So purchases plus changes in inventory. I have written plus here. But since this 40,000 was a negative figure, this will come as negative. So 66 lakhs minus 40,000. 5 lakh 60,000. This way also you will get the same thing. Now if at all this was positive, तो क्या हो जाता है? ये plus में आ जाता. 6 lakhs plus 40,000 because opening stock was more, so there will be more of addition, right? So this gives me the numerator also. Now inventory turnover ratio, cost of goods sold by average inventory 4.6666. Recurring decimal, cut it off 4.67 times. 2 decimal places. Exactly. You will lose marks. Again, I am repeating. If you do not write times or if you leave your answer like this, you will not get full marks here. If you do not write the formula everywhere, you have to write this formula, whatever you have used here. You have to write here the inventory turnover ratio is cost of revenue from operation by average inventory. Okay, I will lose marks here. And you will not lose marks because I know you will keep it in mind that every time you do the sum, you need to write formulas. Marks are kept for formulas. Okay. We'll take just one more sum before we wrap up. Sum number 3. 2 lakhs is cost of goods sold, meaning cost of revenue from operation. Fine, meaning your numerator is given to you. If inventory turnover ratio is 8 times, okay, inventory turnover ratio is also given to you. Therefore, obviously something average inventory must be missing. This is how preempt kind of while reading. Calculate inventories at the end of the year. Inventories at the end of the year is 1.5 times that in the beginning. Okay, the relationship between opening and closing inventory is given to me. ठीक है. तो पहले देखते हैं average inventory find करने में, because using inventory turnover ratio I can find out average inventory. This is the ratio of inventory turnover ratio, cost of, this is the formula, cost of goods sold by average inventory. So here the missing element is this. So I put it here. So cost of goods sold by inventory turnover ratio 2 lakhs by 8, meaning 25,000 is average inventory. Average I found. Opening plus closing by 2 is average. I know that. So let us take opening to be x and closing, which is 1.5 times of opening, will be 1.5 times x. Yes. So average inventory x opening plus closing 1.5 divided by 2 equal to 25,000, because this is 25,000 we have found out from here. We just need to solve this equation and get x. That is opening and closing we will get from there. So this becomes 2.5x. 2 goes here. This becomes 50,000. X 2.5 comes here and this becomes 20,000. So x is what? Opening inventory. But you have been asked to find out inventory at the end. So please read the sum well. Closing inventory 1.5 times of opening. 30,000 is your closing inventory. That's it. So this is rupees. Okay, again the units you should not miss. 30,000 is your closing inventory. So I hope this also is clear. So when ratio is given and how you need to work back on stocks or whatever is asked, right? So I hope you will have some fun time doing inventory turnover ratio sums. Practice more sums, children, which will be more or less on these lines only. Take the challenge, something else, something new. Just brainstorm it and just fight with it, and you will get the answer. Take care, children. Do subscribe to my channel, do like my videos and encourage me, and do share with your friends. Thank you so much for watching. Take care. Come back.